You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 10th of July, 2017. We see that stocks, the S&P 500, up for the day 0.65%. The NASDAQ 100 is represented by a QQQ, up 1.08%, a big swing from the 1+% from the day before. Gold is down 1.02%, and TLT, the 20-year bonds, are down also 0.60%. We're going to jump right in on our weekly chart to the S&P 500. What do we see going on? Well, of course, we had a weekly vertical crossover going down on the charts back on the week ending the 23rd of June, and we have our second week of down movement. Now, both of these past weeks have been spinning tops. This market has not wanted to go down. It seems reluctant in going down, but it is nonetheless slowly moving down. The magic of our weekly vertical crossover is that it is prescient in showing us what's actually happening in the marketplace. Once the price percent oscillator crosses over, it is almost inevitable that the market's going to move significantly in that direction. Even when we had a bit of a fake out on the 2nd of June, when we had just a hair of a crossover going up, the market did go up for another week or so, not a great deal, then leveled off, went up a little bit more, and then started rolling down. But typically, when you look back over time, you can see time and time again. In fact, it's the last 2 Junes where we've had a little bit of a fake out, but you can see time and time again that we have accurate predictions when the weekly chart crosses over. It is amazing. And of course, the one that's even more amazing is that 3-month or quarterly chart that we have shared with you on the special training. We'll offer that again in the future. And of course, you have to be a subscriber at chartingwealth.com to our daily market review, which is absolutely free, in order to get any of our trainings. Oh, and as a second aside, just put out today, we're going to have it in the email going out to all the subscribers. We will have for you a link to how to fill out and use our trade worksheet, which is available for free with every email that goes out to the daily market review subscribers. You get the link to the trade worksheet, the daily market worksheet, and the weekly market worksheet, along with the how to read a stock chart video and the layout from freestockcharts.com. All of that absolutely free. Let's keep moving through these charts. So we see that we are down on the S&P 500, even though it was up for the day. We continue to look at our 2-day charts, backing off a little bit from the hammer down it had been previously, but we see that the downward momentum continues with the derivative oscillator growing in energy. And we, of course, all of our movement is still well below the 2-day trend line. Of course, if we go into that 4-hour chart, we can see that it is trying to stick its head up. It has not crossed over yet going up. Do pay attention to that if the week starts off with a boom and we have a crossover going up on that 4-hour chart. That might be an early warning to you as far as those of you who jumped in and have tried to ride down the S&P. Don't know that that's going to happen, but we're still in a negative posture on the derivative oscillator, and of course the PPO is trying to head up. We'll just see if indeed that happens, and if it does, how strong it is. Again, continue to take a look and keep a lookout on the 2-day trend line. Keep an eye on that, as well as the weekly trend line that we'll start outlining for you over the course of the next week. What's up with the Qs? Well, we had the Qs slam down over the course of the day on Thursday and then bound up again on Friday. We can see that we are in a weekly vertical crossover going down. Since that occurred back on the 16th, was a much cleaner vertical crossover going down because we saw the derivative oscillator switch over at the same time. If you recall, in the S&P 500, it's continued to stay in the green, which is not good. And of course, we had some sideways sliding, and then of course, a good bit of a down week over the last week, and that derivative oscillators continued to accelerate down. As we take a look at our 2-day chart, we can see nice clean action over about 4 candles representing 8 days down. This last day is broken through that 2-day trend line. Again, still lots of downward momentum on the derivative oscillator, and the PPO, the price percent oscillator, still moving down. But that is concerning that the price movement broke through our trend line. As we look at the 4-hour chart, we can see that in the afternoon there was a crossover going up. So do keep a close eye as we get into the new week on what the Qs is doing with this latest rebound. We've had a really nice move on the way down. Some of you, I know, got out when you saw the rebound on the 4-hour chart. So just continue to watch that. Those of you who are staying in, don't lose all that you made in this latest 8-day down move. So we'll continue to keep an eye on the Qs in that regard, and we'll just see what happens. Don't forget that the day following the 4th of July is typically the opening of the week time historically for the NASDAQ 100. Now, we know that because we continue to push for you to buy the Stock Traders Almanac. Jeff and Yale Hirsch are incredible in the service they offer in that book. You can probably now get it at a discount since it's halfway through the year, but go to Amazon, buy that almanac for yourself. Look at it every day. It's one of, it's funny. It is an almanac, and I treat it like when I go to it every day to see what the weather in the market is that day and what can be expected. Incredible amounts of information in there. It's the one book that I actually recommend. That's the Stock Traders Almanac. And of course, it does tell us we're entering the very weak season historically for the NASDAQ 100. So that's what we're looking at now. So pay attention to that. Keep that in the back of your mind as we continue to move through these months, particularly these summer months. Okay, continue to push through these charts. We're moving on to the 20-year bond fund, of course, continuing to crush down. Don't have a weekly vertical crossover going down yet, but of course we warned you way back actually not this past week, but the week before, to pull your positions because bonds were moving over. We had a beautiful run-up in bonds, but that is done. We don't have a trade now because the 2-day chart's going down, the weekly chart's going up. We do not deal in schizophrenia. We have to have the weekly chart going in the same direction. So until and unless there's a weekly vertical crossover going down, we will not be entering into a trade on bonds. Now, bonds could turn around and start going up. If the 2-day chart crosses over going up and the weekly chart's still in an up position, then of course we would look for an entry on an up move. Hasn't happened yet. We'll continue to keep you posted. That's why you tune in every day. Lastly, we'll go to gold. Gold down 1.02%. Does that surprise us? No. Why? Because the weekly trend is down. We had a weekly vertical crossover going down for the week ending the 30th of June. And of course, back on the 16th of June, we had our 2-day chart rotate over going down. We've now had 4 weeks of down movement on gold, and the last week being the absolute strongest week. Let's take a look on that 2-day chart, see what we see. Gold's continued to bound down. It's actually continuing to push through that $116 level. Let's check that out even closer by looking at our 4-hour chart. What do we see? Remember how we told you how prescient this 4-hour chart was? Gold tried to hold itself at around 116.12, and then of course in the morning on Friday, knocked it out. The plugs were knocked out. Gold dropped all the way down to 114.80. And it closed the day at 115.15. So again, as we tell you, this 4-hour chart is your total trading chart. It's just unbelievable how accurate it tends to be. And when you add that 4-hour chart in with your weekly vertical crossover going down and your 2-day crossover going down, it's possible to lose, but hard to. So it's beautiful. We've seen that continue to tell us what to do. Of course, the jumping in point was there at the opening in the afternoon on Monday, somewhere around, 117, and now you're down to about 115, so that's $2 of appreciation if you are into something that is an inverse gold fund. DGZ is one possibility. Of course, it's lightly traded, but it is a possibility, of course, or you can just simply buy puts on gold. Now, again, we want you to do all of these things virtually. We're not a stock calling service. We're an education firm. We do not give market advice. Those disclaimers are everywhere at our site. But we so appreciate you being with us today. Again, if you're not already signed up for and don't already subscribe to our daily market review, which also includes this once a week weekly market review, you need to do so. There's so much great information that comes out in each of those emails. All of it is free. We so thank you for being with us. Hope that you have a great weekend and a great trading week. It is one of the most fascinating things that all of us who follow these charts do, and that is being in the market on a continual basis. And I will tell you that if you fill out your daily market worksheet every day, your weekly market worksheet once a week, you fill out the trade worksheet that, again, we have that special training that we just put out that'll be in the email to all the subscribers. If you're not a subscriber, you got to be one to get it. So it will supercharge your training. It helps you keep up with why you got into the trade, how the trade went, notes along the way, lessons learned when you finish that trade up. It turbocharges your training and will help you become a charting master much quicker than you otherwise would if you ever would. Again, folks, it's not about knowledge. It's not about skill. It's not about good looks. Well, it is. Maybe not the good looks, but the knowledge and the skill. What it's really about is the practice. God bless. All the best from chartingwealth.com.